Welcome to GP Bullhound's Tech Thoughts. Today is the 21st of May, and we're here with Inge Heydorn and Johan Roslund for our weekly market roundup. Today, we will be covering this week's tech market, including reports from Tencent, TakeTwo, and Cisco, as well as this week's IPOs, such as Squarespace, Procure, and the upcoming IPO of Monday.com. Over to them.
Thank you very much. It sounds like last week, a very volatile market, inflation worries, valuation worries, and so on. But with that said, I think we are finding some type of ground, I would say. And I'll get back to that a little bit further on when we talk about software. But also on the reporting side this week, which is quite important and have an important read-throughs for us, is Cisco reporting. I would say the interesting thing there is two things. Really, firstly, that they now report or indicate the strongest growth they have done for many, many years, 10% organically, 6 to 8, which is clearly above what they've done in the last few years. But the second important point was that they feel that the margins will be under pressure due to the fact that they will have a tough time to pass through the increased input costs of especially on semiconductors. So that's why the market took it quite negatively when they reported, as the margins will be under pressure. And the second thing we would like to highlight on the reporting side was Applied Materials. Reports in itself, really nothing to say, better than consensus, Q2 guidance, better than consensus, but we already knew that the market is strong for semi-capital equipment. But one thing I would like to highlight, and we have been arguing here, is that there's nothing for them to do with all the cash they're generating. They can't buy anything because of how the industry looks, and they're really too few players already in the industry. So the important thing here is the strong cash flow is used for dividend and massive buyback. As you know, they released a massive new buyback program a few weeks back, and they really picked up on that already. And I think that's a really, really interesting point.
Another thing, I read something interesting, that the weight of tech stocks in professional money managers' portfolios is the lowest now in 3 years. So it's been a bit of a sell-off that you really can see there. And this was according to Bank of America.
Yeah, absolutely. And we have been thinking about this thoroughly because of the volatility. And we made a strategic decision, especially in semi-capital equipment, which has probably been the most volatile sector, to stay with the sector. Reason why we think it's going to grow faster than the market think. Valuations are really, really interesting. So we decided to stay in the sector and not trade out and wait until the volatility goes down, and almost increase the positions when the stock's trading down. We think we will see recovery. We don't see any type of downturn in tech. So we stand by and are quite positive on the sector.
Shall we move over to China and the first gaming report that we will cover? So Tencent reported yesterday that the share is down 4% in Hong Kong trading today. The growth was slowing a bit, it's 25%, but online games growth was only 17%. So that was a bit of a disappointment, even if we had seen a bit of that in the data points. However, they will release 60 new titles this year and the next, so it's a huge pipeline. And you have some other companies also talking about their pipeline there, Inge.
Yes, this week we have also have NetEase, TakeTwo, and Embracer reporting results. And I think the general thing coming out from the results are that we see a number of AAA products and AA products coming for the second half of this year. And let's put that into context. Second half of 2021 probably will be a single digit, maybe 10% growth per year. Numbers coming in for the industry after a really strong last year. But with that said, remember last year, there was nothing being released. Everybody was waiting for the new PlayStation and new Xbox. So we didn't have anything before the new Call of Duty and Cyberpunk. So the number of releases was very, very limited last year. So this year we have massive amount of number of releases, and the cake is not that much larger than last year. So I think it's going to be for some, a very tough second half on 2022. So we really need to be careful and pick the winners here.
And we also got a report from TakeTwo Interactive with GTA, for example. That was a pretty good report.
Yeah, it was. And the guidance was a little bit weaker than expected on the EPS side, because as they're investing heavily. And once again, 62 new games coming. So the pipeline is just being added. So that is a little bit scary, because as we don't expect the market to be as strong this year and next year as it was during 2020 and the COVID effects.
But we can't complain on the IPO market. It's been a hectic week on the IPO front. So we had Procure, that is a SaaS company for building data and ERP system. That share was up 30% or above 30%. Squarespace, that is kind of a competitor to Shopify, but more on the website template side, was actually down the first day, but has now recovered a bit. And the valuation is below the last private round, so not a super positive greeting there. However, the Swedish oatmeal or oat milk company Oatly got a really nice start. Market cap there over $10 billion. And we can also look forward to the IPO of Monday.com. That is also a nice software company. Any comments on this, Inge?
My really funny takeaway from that is really Maria saying that Monday.com is doing all these commercials in the tube in London now for the moment, ahead of the IPO, which I found very, very interesting.
And it's a nice company, really strong growth, profitability. If you combine the growth and profitability in the Rule of 40, it still looks pretty good there. So I think that should be a stock to watch when it comes to the market. Great. I think we can wrap up this week. Any last comments, Inge?
Yeah, I think just a quick one. I think we found some more stable grounds now after a big correction intake, but I also think that we're going to see some more or continuously more volatility, sadly enough, in the short run. So be aware about that.
Great. Thanks a lot, guys.
Thank you very much.